Look at the bodies respecting the low of the fair value gap. Now we're back down into this bullish breaker. If we lose it now, if we trade below it, because we have gone up into an area that had my interest this morning, this to me, this running up here into this area here, is much more meaningful. And it is in some ways allowing for, if it were to break below this breaker and act as resistance, then we could explore lower lows. But notice when I was giving you the commentary earlier, I would have favored this here, running a buy side and going into this area here, because what would be the mechanics behind that and why it is noteworthy for me. And don't worry, I'll come back to the conversation I was having a moment ago. The buy stops here. If the market trades there and goes up in this area here, we're at a short-term premium. So if we were to lose this bullish breaker, which is shaded here, and trade down below it and act as resistance, that becomes a potential catalyst for lower prices on the day. But notice that it had to trade to a premium. And I'm not saying it's going to go down here, but to me, it would be worthwhile to see this very thing happening here versus just opening at 9:30 and just cascading lower. You follow what I'm saying? Meaning that everyone else just wanted to go short rate from Jump Street right at 9:30. And at 9:30, they gave them that little cookie, made them feel like they were on the right side of the marketplace, and allowing them to put what? Buy stops here. Also, anyone that didn't trail their stop loss here while being short early on, now they have their stop here and here. So there's two pools of liquidity with an imbalance shaded in this area here. So if it were to go lower, okay, it would be better for you to wait. If you were trying to go short or looking for a reason to be short, it would be better for you to wait for buy side to be taken out, like it's been done here, and trade up in this inefficiency, and then judge what price is done after that. Has it sold off since it hit that? Yes. Did the breaker respect it? Or I'm sorry, did the price respect that breaker? It has. We're back inside that fair value gap that's shaded in pink. So we would not want to see it show, support in this. The PD array, which is the breaker itself, this candle here. It's not simply this old high, draw a line out, resistance, broken, turn, support. We're looking at how does it react when it gets there, and you're constantly weighing that. Does price respect these PD arrays? And since it's respecting it, you don't want to hold on to the idea, okay, now if you were thinking about going short, my method teaches you'd have to see that breaker be broken and then come back up to it and act as what? Then resistance. You can't just simply say, oh, we have a fair value gap, let's go short here and expect it to run out these relative equal lows. There's a logic that's being taught to you. You have to see certain things to qualify whether or not something should be there. And we have such a large gap from yesterday's close to where we opened this morning. This entire fair value gap, we were at now consequent encroachment of that. It should expand up into the high end of it. And if we run through it, come back down and touch that support, it may act as a catalyst or springboard to take us up into closing in the small little remaining balance of this fair value gap and then up into here, which would be what? The previous week's new week opening gap low. And it would be digging up into the difference between Friday's closing price and where we opened at 9:30.